Hi, Warriors. How's everyone doing? Hi, RC, AJ. Yeah, let's have a great week, but let's not be completely dependent upon our P&L to, describe a week as being great. In fact, you know what? I bet some of your greatest weeks had nothing to do with trading. Just keep your balance, okay? So we can't have our whole mental attitude being based upon uh, all on our trading all the time, or you'll become bipolar. I don't want that to happen to you guys. I went through it for you. Okay. AJ, Ryan, James, Saloom, how are you? Did you take a shot? You taking a shot this week? 6,000 S&Ps. I still think NASDAQ could get to 22. Marcus, Javier, welcome to Face. Nice to meet you. You found a real nice room. Kurt, how are you? Bran, everybody? Had a little UJ on. Okay. So UJ held. So let's get to what's happening here in the markets. So far, Euro's the only major that made a new low. Cable hasn't yet. Yet. If it does, it's a three. King dollar is pretty tough. The commodity currencies are holding up the best so far. You have a second higher low. And the yen's at resistance, but I don't see any selling here. I don't see anything on the interest rate front um, that would be driving it. Perhaps the yen up here, and I may as well let's bring in the dream team. A money shot from Brand. Okay, so Ryan, here we are. I mean, this 5380 was important over here, and then we took it out, and then it was a false breakout, and here we are right back here. Um, what are you thinking?
Morning,
My tra
Dale.
my
Morning,
trading
mate.
warrior brother.
Uh,
How are you,
yeah,
bud?
it's looking strong again. I think
Yeah,
we got a mix of things going on. Excuse me. You mentioned rate trade. There's a growing impetus in the market amongst expectations that the Fed are going to cut less
yeah,
than is expected. That's a bit behind it. Some of that's obviously to do with Trump and what his policies might bring, but also just the fact that also the US economy is doing a okay again, and there's no reasons why the dollar or yields at the moment should go back down again. Um,
okay.
Obviously, bond market shut today, so this move is a little bit,
Oh,
you
no
know,
wonder the 10-year was so quiet.
yeah, that'd be it.
I'm strongly neutral here today. All right.
Yeah,
Okay, so they may play catch up with the yen tomorrow then.
yeah,
Um,
likely looking at this, but it's like playing with one hand behind your back at the moment when you don't see what yields are doing. So
okay.
yeah, the euro's getting it in the neck. It's getting it versus euro in euro sterling as well. So that's
Yeah,
pretty
yeah,
much every day you got a euro sign on. It seems to be getting a kick in the teeth at the moment.
yeah.
So yeah, it's
Uh, yeah,
dollar
one
and
thing
next euro.
we have Tracy coming tomorrow, Shy
Yeah,
Girl. So, I'm going to ask her if she could come up with a narrative fundamentally for oil to get down to this level here, and then maybe put in an important level. So I've had this line a long time. In fact, there it is. So it's coming in low 60s, kind of a wedge off these two lows in here.
yeah,
So I'm thinking we go down here into January, and there's no doubt in my mind that there are going to be strikes against Iran. They've been floating news about the assassination attempt on President-elect Trump and other guys from the Iranian Revolutionary Guard. I forgot their initials, but they're paying hitmen on the street 500,000 to take out other people too. They have a hit list. So I actually saw a general on TV. He said that that actually should be answered with a strong military response. So I think that between him and Netanyahu, that's going to happen early next year. So after after he's installed.
Yeah.
Anyway, but you guys remember I've been talking about natural gas to everybody and our guests. Check this out. We have like a breakaway gap. I don't know what the news was. It was probably uh, Trump related, but
Well,
there's
there's been a
something.
big uplift in European gas as well.
Okay,
Um,
yeah, yeah.
that's a bit weather related.
You
But
see, we
but you
talked.
are, yeah.
Remember we talked about that it may not be another warm winter. I mean, last winter, everyone was saying that, or maybe it was the one before. All these years seem the same to me now. The first year of the war, I believe it was, that Europe was going to freeze and starve to death, but they had a warm winter. Was that last winter?
Um, yeah, it was a bit mixed last winter. We had some cold spells and some wet spells. I think there's been a lot of floods across, particularly Spain.
No.
But just reading some of
It
the comments today, it's not so much the reason why Nat Gas is high is partly because of the weather, because there's no wind and there's been no sun. So
okay.
all your climate or your green energy
Yeah, green.
supplies are not bringing it. So you got to rely back on digging it out the hole, piping it out the ground. Um,
Yeah.
so that's one
Okay.
of the reasons. Obviously, we're going into winter as well. So yeah, it's
Just
no
you,
exercise.
I mean, for people that, like technical analysis, I mean, look at this base. So, just a bear market rally would be big money, right? $10 to two. So if it got, that would mean at least three back towards 5.38% back to this low, maybe.
Yeah,
And we could have something more than that. But let's talk about the relentless dollar here. It won't stop. I keep thought I had it last week after the election for some kind of pullback. The yen worked, but the dollar didn't. We're diverging here. What do you think? And especially that the Canadian hasn't made a new high yet, and Aussie is still making a higher low.
yeah. I'll be surprised if dollar CAD doesn't have at least a look at 140.
Okay.
Um, it's the price action is just building up, building up, building up. If it
Yeah.
wants to have a go, I
Yeah.
think your first key instance is if it gets above 39.50 and starts to hold it. It stuck its nose above a couple of times, but it can't stay there. I think if you get that sort of move where it breaks and holds, then you're going to be 140 pretty quickly, and then
Yeah.
we see what we want to do after that.
Yeah. There's at least one stop above this double top. They're exactly the same price. It
Yeah.
would have been nice if it had made a new high here and then came off and now making another new high, but I don't know.
I would
Yeah.
have liked to dip on Friday to get into. I don't want to chase it up here, but I would have loved to dip on Friday over that jobs data to get in
Okay.
and
Nice.
wait.
Okay. Gold getting hammered looks ugly,
Yeah,
doesn't it?
yeah,
Silver was holding up, was only down a few cents. Doesn't look good either. I have some stuff down here, 29 and a half, but uh, guys, you should see what Grega has for silver, but you'll have to join. And it's important if you're a silver squeeze person to see what he's thinking here about silver, because he was certainly right on the way up. Um, like a lot of guys here on the team. And how about a tip of the hat to Stelios, who knew before the election what he was going to do with all his silver positions, depending upon who got elected. He's on vacation, or he was, so it was the right decision. Um, he got out of everything, the silver and everything. Let's see, when was it? Was this the day? Yeah. Okay. So he's saved himself some money so far. Got out well over $1 ago. Um, okay. We'll see what we'll see if the bonds can the 10-year we get any movement or the TLT. Look, they're trading them in the aftermarket. See the spec? A lot of action happening here on the screen here. I bet a one lob could move the market.
Yeah.
Anyway, all right. So K-Man's still away, right?
Yeah, he's away this
Yeah.
week.
All right. So let's go to risk. We're almost at 6,100. God, it's like relentless.
Well, the 161% extension was we were just a little less than 10 points from reaching it, Dale.
Well, now
Yeah.
we are
Yep.
okay.
Yep.
That could,
Yep. We
so
we
that
uh we updated the charts in the chat room and we're like, well, we're about 10 points away from it's the 161% extension of the move that we saw this summer, the
yeah,
sell-off that we had in July. So yeah.
yeah.
Basically
Oh,
I think you're two drive there. Yeah.
okay. All right.
Yep.
So is it getting? It's not getting near this return line yet, is it? That's still above like
I
63
don't
ish.
have that drawn, but we're still got some distance, I think. Let me
Yeah, we do. We do.
yeah.
6,100. Well,
Yeah.
that's 6,100 also, Blake, is the objective off the formation that we had once we broke out over 4,800, which is a breakout that Ryan played. Um, so, it was here, this was a breakout of a triangle, 35 to 48, 1,300, 1,348 equals 51. So we're almost there too.
Yeah, yeah, yeah. Look, this market, all the technical levels that you find, they're just speed
Yeah.
bumps as of now,
So
you know.
far, yeah.
Yeah, I mean,
Yeah.
yeah. I
Yeah.
mean, really, like, what's stopping the market from rallying? I mean, I I don't know. You know what I
I
mean?
yeah, I mean the strong dollar is not impacting it at
No,
all,
and
right?
we're in a seasonally a really a really strong time of the year. So why should the market stop here? You know what I mean?
Yeah.
That I mean
Well,
that's what it seems like to me. So
yeah. I mean, there's so many things happening geo, but nothing has really mattered yet. So maybe we just do keep blowing through year end, and then things change in January. But uh, I'm thinking this. Okay, you guys. Last year I played Apple from the short side, and it was pretty weak. I mean, it went down to this 160 level. So it was during this time frame. I was playing the short side. Some worked, some didn't work, but for the most part, it wasn't making new highs while the market was. And I look at it here, how we're diverging on the weekly, and more than that, it's more of a fundamental play because, you know, when Biden was president, G just had only government employees couldn't use iPhones anymore. And if there's tariff battles going on, um, you know, I don't know if Tim Cook is in the club with Elon and people like that. Um, I, I I think that Apple could take a hit because of what could happen with trade relations with China. So I'm stalking Apple again. And then if there ever is anything in Taiwan, I've heard people say, Apple could just, drop hard. I forgot the rationale behind it. They need the chips from Taiwan to make the iPhones. Could that be it? I'm not sure, but this is a candidate. And one of the thing I noticed from Apple when we bottomed down here, because I remember the day I needed just a few, it was right at my strike price. But this really led the led the advance that we had from last year. I mean, it turned good, and then the rest of the market turned good. So sometimes it could be an early indication. So why isn't Apple making new highs on this blow off? Meta did, Amazon did, Google hasn't. Oh well, yeah, Google hasn't. Netflix has. Microsoft doesn't look like it looks like it's topped. So, you look inside the market, Nvidia is making new highs, right? Diverging, but the semiconductors are still way off the highs. And they led, okay? They led this thing.
Sure,
The
but
semi.
you're getting more broad-based participation now. And I'm not saying that
Oh, that's a good
without
point.
the leadership of technology, you're not going to get a continued market rally.
But that's a
But
good
it's hard
point.
to short anything right now. I mean, wouldn't you rather just wait for the market to show that it's topped and
Yeah.
then,
Oh, yeah.
then pick on those? I
Yeah.
mean,
But
I mean that's the
you
way
still have to stalk it
right.
while it's doing it. So, I don't know what, if you do it, but I have a thought process that I'm going through before a market gets to a level or sets up a condition. I guess it's called bias, right?
Yeah.
Things that you're looking for. So it's worth noting in any complex, I don't care if it's commodities or currencies or equities, to see what's happening under the hood
Yeah.
with
Oh yeah, of course. And
and
go
gives you
ahead.
your preferred longs and shorts, right?
Yeah.
Equities that aren't making new highs and the market's making new highs are probably your preferred shorts because they're not doing it with a tailwind,
Yes. Yeah.
right?
Well, Dale, I'm gonna let me show you guys just kind of some things that are happening right now, and I think we should be talking about Bitcoin first and foremost. Can you guys see my
Uh,
screen?
yeah,
Okay, we should really talk about Bitcoin. I mean, Bitcoin continues to rally. This breakout has continued.
yeah,
We held last week at the 74,000 level. We basically
yeah.
came down after the election. We came back down to 74,000 and some change, and then continue to blast higher. And Bitcoin looks very, very strong. And this is one of the things that should signal to you guys that
Yeah, the
the
melt
Trump
up.
trade is continuing. I mean, the dollar, look at the dollar and the way the dollar's acting right now. And this move is clearly being seen in crypto. Yeah, we're pulling back a little bit right now, maybe because we're at 127% extension of this move, but clearly the move is still,
Yeah,
very, very, very strong. And that leads me to believe that the dollar is probably going to continue higher. We had a bearish outside week or a bearish engulfing week in the euro dollar,
how did
and
I
that
miss
has
that?
continued lower.
Yeah,
Was that?
I don't know how I missed that outside week.
I talked about it on the week ahead video, but yeah,
Yeah,
it was very, very bearish reversal. David in our chat room, he pulled it up on Friday and he's like, man, this is going to be a very bearish week in the euro. And I'm like, yeah, it is. And I agreed with him. And now the question is, are we going to see continued follow through in some of these other currencies? I think, and you just pointed it out, Dale, the commodity currencies have held up very well. Well, I would say the reason why they've held up so well is because stocks are at all-time highs. I mean, so of course the commodity currencies are going to react a little bit better. But what happens if equities actually turn here? And when I was telling you about the 161% extension in the S&P, I'm not saying that the market's going to stop, right now. We are at a probably pretty key resistance here, but you can see this is the 161% extension right there. We're just above the 161% extension from the post-election. So is the stock market bearish? No, I don't think so. But we might get a little bit of a pause here, and if we get a pause and a pullback, look at the currencies like you got the dollar CAD, and then on top of the dollar CAD, you got some weak crude oil right now. And I know you were just talking about what's happening in the Middle East, but when you see crude roll over, and if you're short dollar CAD, and this is the point that I made on the week ahead video as well, and we talked about it here, you know, look at how bearish, there's 95% of retail traders are short dollar CAD. We talked about that on Friday. And they're getting close to getting stopped out. And again, if you're seeing crude oil just weak, and you're like, well, the crude market really hasn't correlated with the Canadian as of lately. You're right, but that doesn't mean that this move lower in crude can't provoke some selling of Canadian dollars and to get us above resistance. And once we start taking out some of these resistance levels, what's going to stop the dollar Canadian from reaching for, the mid 140s, especially with the dollar strength that we're seeing right now? So, you got moves like that. Yes, like I said, the Aussie's holding up decently well right now, but that's in a strong market environment. But currently, we are seeing the stock market, yeah, I mean, we're at resistance. Maybe it does pull back, and if it does, these commodity currencies may suffer a bit. Ryan, I wanted to ask you, you saw the dollar yen, and we rallied off of this really key support. Dale, I think you tweeted about it yesterday because I know I retweeted you. You think this support's going to break, right?
I did last night.
Okay, you did last night, not so much today.
I'm still I still think it's a possibility, that we stall out here. I mean, I'd be more worried if it was at new highs. This
Sure.
still could be a bounce, well, but it looks, it's not what I was expecting today.
There
Okay,
was some news out last night, Ryan, with the summary of opinions, which is basically the BOJ's minutes, right? What do you think? Do you think that's what turned the dollar yen higher?
It might have been a little bit of it, but those opinions you hear every side, so it depends on what the wires want to pick out of that and use as a headline. And Reuters went with the one guy who said that they should take a more cautious approach, watch markets a bit longer and before hiking again. But then you had others who said that they shouldn't be so strict on sitting back and assessing the risks all the time. They should get on with it. So it's 6 to 1 half to the. I think this is all the Trump stuff. I think maybe that story Friday that was out about Lighthizer coming in as Trump's trade man, potentially a big protectionist guy. So I think that really sort of kicked the ball rolling, because this all started really on Friday, and it's just kicked on today.
Yeah, and I think there's a few. I don't know if that's confirmed about Lighthizer. I think that's that there's a few potential trade representatives, and I think Treasury Secretary names are floating around. I don't know if Trump is selected them all just yet.
No,
I'm not. Go ahead.
Yeah, nothing's signed, sealed, and delivered yet.
Yeah. Yeah, it is interesting. And it's going to be interesting to see, how his cabinet shakes up, because that could really influence what's happening here. I was just reading over the weekend, and you're talking about like the euro sterling. There was a big breakdown in the euro sterling. I was long, and I got stopped out overnight when it broke through these lows right here. But this is a pretty big breakdown. But you'd pointed out that there's a lot of support if you look left. You look left over here. There's a lot of support, but below there, man, it really opens up. But I was reading an article about how the UK would be shielded somewhat from a lot of these tariffs. I don't understand the mechanics of it and why, but. The article went on to say that sterling might be the more, safe haven type of currency. How do you feel about sterling?
We don't export anything. That's why.
That's
long and short, we don't export as much as everyone else. So, yeah, we would be shielded from it a little bit. Unfortunately, I'd like to be in a position where we are tariffed on exports, but we're not. So, yeah, it's holding up a little bit better, though. We just had a secondary kick in the dollar here, and euro dollar's now at a fresh low, and cables, sitting around 28.80s now. That's heading towards the low. So the pressure's telling eventually. But yeah, I don't see a huge reason why the pound should rally significantly. We've got enough domestic mess going on at the moment with our budget and the politics over here. So, and that seems to be a big theme at the moment. Japan, political trouble; Canada, political trouble; France, political trouble; Germany, political trouble. It's politics again, raising its ugly head all around the world.
right. But playing the euro against, or excuse me, sterling against crosses makes a little bit more sense, doesn't it?
Yeah, if you pick your poison, yeah,
Right.
definitely. I mean,
Like just going long sterling right now seems a little risky, just because you're obviously fighting the dollar. But if
yeah,
you're buying sterling against, let's say, the Australian dollar, because Trump might be a little bit more harsh on China, maybe that's a better selection. Being long pound Aussie in a situation like that. I don't know. There's just some thoughts, just some things I was thinking about. Um, you're right. The dollar is getting another leg on, and I was just looking at the euro and just reminding everybody with this drawing here that the reason why this is an equal leg move, or a flag pattern, if you want to look at it like that, or if you want to say, oh, but that's no, that's a pennant. However you want to look at it, the reason why it should make it down towards 105 or 104 and change is just because it had such a shallow retracement. This is only a 38% retracement. That was ahead of the elections. So now that we've gotten past the election, the dollar should, continue to extend its legs. And like I said, with the bearish engulfing weekly chart that we had in the euro, it's a hard trade to stand in front of. And I guess the question would be, if you're going to have the dollar rallying in this environment when stocks are acting well, how's the dollar going to react if we do see some risk aversion? Ryan, how do you feel about that as far as what the dollar is doing now, performing versus how it would be performing in a different environment? Should we see something different?
yeah. I think that's a big risk that's potentially growing now. Particularly, now we've got a Trump presidency, as to whether we see some of these narratives, correlations changing. What is the definition of risk going forward? Is it what we've had for the last 3-4 years, or is it going to change? So I think that's something that traders have got to be on watch for going forward, because if you're trading certain patterns certain ways and they start breaking down because narratives are changing and risk patterns are changing, you've got to be careful that you don't keep flogging the same strategy that stops working. If you find your strategy stops working and markets aren't moving as you expect, you need to stop, pause, have a look, see what's happening. Is it just a temporary thing, or is it going to keep going? And then you need to adjust your strategy. So I think the big risk moving forward is, like you say, what is going to be the definition of risk moving forward? And I think that's going to be changing.
Yeah, and it's gonna. We have Luke Groman here, which is going to be. I think he's going to be a great person to potentially answer that question. I was listening to an interview with him recently, and he was talking about how bonds are uninvestable, and we've seen this massive rally in yields. And it looks like to me, it looks like it really that idea really wants to continue. And I think it's going to be interesting to see where the breaking point is, if there's a breaking point. Well, there has to be a breaking point at some point, I would think, where we get a Liz Truss type of moment potentially. But yeah, I mean, this move in yields, I think, is going to be really important moving forward, and how the dollar reacts and its function as a currency, whether it's a risk aversion currency, whether it's the cleanest dirty shirt in the hamper,
Yeah.
whatever analogy you want to use, it is going
Oh
to be.
yeah, put a dollar under the microscope. Tell me it's
Yeah,
clean.
I think it's going
You
to be.
better wash your hands if you're handling cash, Blake Morrow.
But
Well,
this is going to be important because, yields didn't really pick up on Friday like we saw in the dollar towards the latter part of the day, and stocks going up.
Yeah,
Yields stayed pretty low.
yeah.
And so obviously they're shut today. It's a difficult to get a read on it. But I think tomorrow will be important. If we're still seeing this dollar strength and, tonight when Globex opens or whatever, we don't see US yields responding in the same way, going back up, I think that's going to create a bit of a wonky move tomorrow.
Wonky up or
yeah,
down.
yeah. Well,
That's a technical term, Dale. Wonky.
wonky, yeah,
Will
and
Willy
I'd like
Wonky.
to hear Luke actually define the word wonky as an American. So hey, listen, I want to I'm gonna pass it off to Dale because Luke is here and he's joining us right now. So I urge you all to stick around and hear what Luke has to say. But I also want to stop for a second and recognize all of our veterans, not only the ones here in the United States, but folks who have served their country and fighting for freedom and fighting for their country globally. If you've served in your nation's military, thank you for keeping this world safe and a better place. So, with that being said, Dale, I'm going to pass it over to you. Ryan, thank you so much for being here as always. Always love the Flow Show. If you guys don't listen to his show about 3 hours ago, you should, and you can find it on YouTube. And I listened to the stream of it after the fact, so to get caught up in the morning. So, thanks everybody. Have a great
And
Veterans Day. And
yeah,
Dale,
happy Veterans Day, Blake. I'm glad you became a trader and gave up being a soldier to be a trader. You've helped a
thanks,
lot. You've helped a lot of people.
thanks, buddy.
Okay, so Luke, it's great to see your face and be able to talk to you since we had this red wave. Does this red wave nuance your narrative or change anything, accelerate what you thought was going to happen, stall it? Um, where are you at after this surprise red sweep here?
It depends. It depends. I think both Blake and Ryan made great points about kind of watching some of these correlations. I was just noticing that myself of dollars up,
Yeah,
10-year yields down. That's a potential correlation break. And uh, that has been governing for the last 3, 4 years, like clockwork. And so the
yeah,
question I think is going to be, I don't think we want to answer it in a day or two. I think we need to let a couple of maybe a week or two go. And the reason I say that is the move volatility index in the treasury market
yeah,
exploded higher on a single day event risk. Harley Bassman, the creator of that index, had a great piece about 2 weeks ago, 2.5 weeks ago, going into the election, where he was able to strip out basically the contract roll on that move index and say, look, this is the bond market is treating this election as the single greatest day of definable risk since the United States set the January 15th, 1991 date to invade Iraq. The market could look at that date and say, something's happening here. I don't know what, but I also know it has the potential to be very market moving. And obviously it was. My point in highlighting that is that this correlation that we've had for the last 3, 4 years of dollar goes up and that starts putting pressure on foreigners to defend their currencies and start selling down treasuries, selling, yields up. It does appear to be breaking in the very near term. However, some of that breakage may be simply kind of this roll off of the move index, which has fallen sharply post election. And that in another week, we're going to see this correlation maybe keep breaking, and then all of a sudden the correlation is going to rejoin. Because the reality is, foreigners are still short $13 trillion in dollar denominated debt, and so the reality is the euro dollar market didn't change; it's still there, and so there is a price of the dollar where they're going to sell treasuries again. And so that's how I'm thinking of that in terms of the tactics of it. But I definitely think it's very viable because it is possible that maybe there is something that has really changed in terms of behavior with Trump. So I think we need to watch that over the next week or two to see that correlation if it continues to break down or if it kind of rejoins after normalizing post this move event risk that was
okay.
priced in, priced out. So
Well, Yeah.
Yeah,
So
beyond that,
10 years closed. That's why they're down. So we have the bond market closed. What I'm
oh
looking at
yeah, yeah.
last week. Yeah, so I'm strongly neutral when markets are closed. That's my opinion.
Yeah, that's always wise, sage
Uh,
advice.
so, but look at the week. We had a decent week in TLT last week, and I know you're negative, and long term, I am too. Can you give me a narrative, even with Trump taking office, or maybe
Sure.
it gets it out of the way for us to this bear market rally could continue for a
Well,
while?
and to
Because
be
go ahead.
Yeah, I mean, to be clear, when I went on that podcast, I was trying to be very clear with Adam that I'm negative, that bonds are uninvestable on a real basis. I said they can
Yeah.
rally nominally, right? So
Okay.
like, that is ultimately the bull case of look, I think we need to take this Trump administration, and I understand there's a tariffs, strong dollar, yields down, kind of trade in place right now. And I've been doing this long enough where you just kind of feel like, I don't want to stand in the way of that. I heard someone say I don't want to stand in the way of it. Like, I agree with that very tactically.
Yes.
However, I think last week on Tucker Carlson, RFK Jr. said that he spoke with Trump for several hours, and that Trump was saying shocking things to him. And so Tucker said, "Well, shocking how? Shocking? Are you shocking good?" And RFK Jr. said, "Shocking good, but very impolitic. He's an impolitic guy, and he's going to do what he wants." And so I'm struck as I get beyond the next couple weeks, the next month, I'm struck by this divergence between what I would say are Wall Street, broadly speaking, investors, traders looking at the market saying, okay, here's where we are, and here's the various paths that we could go and the implications. And I think my base case is increasingly shifting toward that's the wrong way to look at it, and that the right way to look at it, at least with part of your brain, is to start at the end and work backward as to what Trump could do. In other words, Trump wants a weaker dollar, a way
Yes.
weaker dollar.
Right.
And okay, so how can he do that? There's a lot of different ways that are shocking and impolitic, right? You're hearing talk of end the Fed from people going into the administration. Will they
Yeah.
end the Fed? I don't think so. Will they talk more about end the Fed? If
How
they need
about
to get the dollar
defaulting?
down,
There's been talk about the defaulting on the debt.
defaulting on the debt, end the Fed,
Oh,
shadow Fed, get whatever. There's a lot of ways you can get people scared out of the dollar. And so I think what's the bull case at the long end of the curve? The bull, and this is why I said I think they're uninvestable on a real basis. Get the Fed to cut rates to zero with nominal GDP at 5 to 6%.
yeah.
The long end's going to rally technically for a while, especially. But
Yeah.
Bitcoin's going to be 200,000 and gold's going to be 4,000. The S&P is going to be 8,000. And so you're going to make 10%, 15% on your TLT, maybe 20%, but you're going to give away 35%, 50%, 100% in these other more inflation sensitive assets. And inflation's going to pick back up. So that's to me the bull case on TLT is basically some sort of financial repression deal, or some that's in the next 3 to 6 months.
Yeah. So, before the Fed cut, and I did want to get to the Fed, there's so much to talk about today. I figured that there could be some type of bounce in yields, like a sell the rumor, buy the fact on yields, but I sure didn't expect them to get above 420, which was the breakdown here, and actually hit targets off this 420 sale, and we're up here. So the persistence of the move tells me this low is in, and any pullback now in yields maybe to under four again, 390. I think that's all they have in them before they make a move back towards the highs.
I could see that technically, and I think importantly the persistence of that move. Something we've been saying, we've talked about it before, Dale, something we've been
Yeah,
saying with clients for years. Since the Fed started hiking rates aggressively, was the Fed's mistake this time was fighting inflation. That basically they came out and tried to be Paul Volcker with the
Yeah.
balance sheet of Evita Peron in Argentina. And
Yes.
you don't get to do that. Like there's an order of operations that must be respected. And the order of operations when you have debt to GDP of 120% is repress the bondholders, inflate and yield curve control, however you do that, from 120% debt to GDP down to 70, maybe 80%. Then you can play tough guy Volcker without the threat of putting your government into fiscal dominance, without the threat of essentially bankrupting the United States of America, where now your interest expense is the single
Yeah.
largest line item individually. Entitlements
Yeah.
collectively are, but uh, I tweeted something last week where Powell said, well, we're not involved in fiscal. I'm like, you're not involved in fiscal, like the pig's not involved in breakfast, right? Like he's committed. Hey, you raise rates, you're spending fiscal dollars. You cut
It's at
rates,
least
you are committed.
confident. It's at least confident in his voice that I've heard him. Um, maybe ever since he's saying "Kumbaya" after he tightened and then reversed course several years ago. He did not sound
Yeah.
sure.
Well,
Why?
I
Why
think he
did
knows he's
rates
at a
go?
spot,
Right. Why
right?
did rates
Right.
go up? He goes, well, it's a market. They're looking at growth. He was stuttering a little bit. It was the weakest performance I've seen. He's worried.
I think that's exactly right, and he should be worried because he screwed up, and the way he screwed up was not considering his operating environment. So, for 2 years, I said, look, they're going to get to a spot where his choice will be, how do I want to lose the long end, by cutting or by loosening, because of that debt load. And I
Yeah.
think that October, or whenever it was, late September, October, 50 basis point rate cut,
Yeah.
that was him deciding to lose the long end by cutting.
Right.
They didn't need to cut. The real economy
No.
didn't warrant it. I think there's some slowing, but like 6% nominal GDP growth, like 4%
Yeah.
inflation, really? And it was the fiscal side and so I think that's important context as we then tie it back to Trump, which is there's this, moves, correlation breaks, etc. Like in the end, the debt is still an issue. The deficit is still an issue. The competitive position is getting worse by the day, vis-a-vis China and others. And so, you
So it
know,
wouldn't have mattered who won. We were still heading towards a mountain.
the
All
debt
right.
has to be devalued on a real basis, one way or another.
Okay.
Um, that's it. And so I think it matters around the edges, but
Yeah.
ultimately, in terms of, are we going to get EV stimulus versus oil stimulus, or opening up the Alaska National Wildlife Reserve for oil drilling versus putting 64 million solar panels in Colorado, whatever.
Or tax
Those
policy.
tax
Tax policy.
policy, maybe, but here too, I see with tax policy a lot of sort of the bargaining stage of grief still. People saying, well, we just need to raise taxes, we just need to cut spending. Like, no,
Yeah.
like you for since 1940, America can have whatever tax rate it wants. It gets 18.5 to 21.5% of GDP, full stop. And it's at about 19.7%, smack in the middle. So maybe a little, you can raise
Okay.
rates, effective tax rate a little, but like people say, well, they were 80, 90% under Kennedy. Well, yeah, but everything was a deduction. You were a doctor, you could deduct your car, you could deduct, I mean, just everything. And
Your
Reagan
whole
tax,
life.
you
Your
deducted your whole life. So your effective
Yeah.
tax rate was 18.5 to 21.5. So like there's this bargaining phase. Well, maybe we can do this, maybe we can do it. Now, if we get some sort of shocking information drop on these, some sort of new energy technology, these UAPs that keep getting put on, the UFO stuff. Like this is the more you see serious people talk about this, the more I mean, Harold Malmgren, who was in Washington for 65 years, out
Yeah, I
on
know
Twitter
Harold.
today. Yeah,
What did he
Harold says, yeah, this
what did he
morning he said,
say?
look, he just said this morning, the question is how fast will Trump release some of this UAP stuff? And then how fast will the Russians and Chinese release their UAP stuff? So there's some like major, and then like that could completely change. If we get basically free energy, you can take a lot of what I'm saying and throw it in the trash. I'm going to be dead wrong. Bitcoin will tank, gold will soar. Well, probably
What's
tank then soar,
yeah,
but
yeah. What's
those kinds of
Dalio?
things are hard. What's
What's
that?
Dalio? Dalio did an interview lately. Didn't he have a real big bearish case for Bitcoin's bearish Bitcoin and has a pretty low price target on it?
That I
Did you?
don't know. I didn't see that one.
Okay. All right. I heard about that. I want to talk about tariffs as a policy. And, people who don't study history, it really did deepen the Great Depression, the Smoot-Hawley tariffs. Can you see tariffs exacerbating the situation we're in? And couldn't China really cripple us if we piss them off enough? Because I read years ago, and you're writing about this now, that if a transformer went out, it would take us 5 months to get one because we don't manufacture them here. And where are they manufactured? Yeah, you're right, China. So you're writing about these. People were talking about it because there were people going out and shooting at transformers, trying to knock them out. People have talked about cyber attack and we go dark or have a problem. Um, do you have a generator at your house?
Yeah.
Okay.
Natural gas powered, baby.
All right, there you go. So Luke is prepped for something like this happening. So isn't it possible that China, because we haven't reshored everything, we've hardly started to reshore, that they still have all the production and they could cripple us if they want with things that we need that they won't send to us?
In theory, yes. Ultimately, I saw somebody highlight the other day that look, the Smoot-Hawley tariffs deepened the Great Depression, and then they pointed out, hey, the U.S. in the Great Depression was in China's spot. In other words, we were the factory of the world and exporting to everybody. Um, and that's correct. And what this person didn't point out was that the US now is in the position of basically Europe slash Weimar Germany
Okay.
back then,
Yeah. Okay.
right?
Yeah.
So,
Yeah.
when you look at the trade flows, yeah, we were exporting everywhere, and Smoot-Hawley basically was very deflationary, broke down trade. So then we don't do as much business globally, really deflationary in America. Okay. Now, Germany had already suffered its currency destroying hyperinflation by that point, but you had the UK devalue the currency, you had the French devalue the currency, the Germans basically had to go into uh, to avoid another hyperinflation because they'd already hyperinflated. They slashed the government to the bone and paid the price politically with the election of Hitler. So the point here is that yes, tariffs are deflationary for the exporter, so for China, but they are extremely inflationary
For the
for the
consumer.
importer, for
Yeah.
us. And
Yeah.
people say, well, China will pay up, blah, blah, blah. Maybe. And what it does tell me is that there's an overriding consensus that, the COVID supply chain interruptions are what drove the inflation, not the money printing. And I think it's a
Yeah.
combination.
Yeah.
And we're talking about a permanent supply chain disruption. And that's part of the reason, it filters into my view of why bonds are uninvestable on a real basis. Yeah, you might make money in the short run, but like, do you really want to be long the long end of the curve on a real basis as we're getting into a trade war with the world's factory? That's
Yeah.
not wise in my opinion. So, can China do those things? I'm told they can. There's an effort afoot to to get China out of our grid effectively from a supply chain standpoint. But some of it is offshoring, but some of it is just poor planning by the prior administration. In the same way that there was this just not realists running thing. My friend Doomberg pointed out that transformers are designed on a cycle, on a cycle of use, which is to say they run hot during the day and then at night when everyone's sleeping, they cool down. Well, when does everybody plug in their electric vehicle? At
Yeah.
night while everybody's sleeping. And so these transformers never get a chance to cool down. Well, his research showed that but when you get enough EVs plugged into the grid, what happens to the useful life of your transformers. It goes from a 30-year useful life to a 3-year useful life.
Wow.
Whoa. Nobody talked about that with EVs. And to your point, we don't really make transformers anymore. Not really. It's the Germans and the Japanese and Alstom, which is I think French or at any rate, and then the Chinese. The Chinese are absolutely big there. So we're working on doing that. But again, okay, let's bring it back. Well, building factories isn't deflationary. I don't want to borrow money. I don't want to lend money to the government at 4.25 or wherever the 10-year is if we're going to bring back a bunch of factories, because that
Right.
money's going to, inflation's coming back, huge,
Yeah.
as the Donald might say. So
Okay. All right. So inflation's not dead. That could be could that be the pin that pops a bubble? I mean, there's no way to say that this isn't, we're into parabolic advances now on equities. In fact, we're into parabolic advances on everything except the metals stopped for a while because of this dollar. But you have S&Ps and you have and you have Bitcoin. I mean, everything's going up together, but this is the first time I've seen some differentiation with gold going down and the market going up. They were going up. Everything was going up together based on whether the dollar was weak or strong. Is that changing?
maybe in the very
All
short
under.
run, I think in the very short run, like, I'm not surprised to see gold down on a Trump victory, but I think ultimately what we're watching is I think what we're watching is two things: gold selling off on sort of a relief rally of that Harris didn't win, which
Right.
I think there were some serious concerns on, and then also just that the related positioning. I think gold's going to be higher a year from now,
Yeah,
potentially
but
meaningfully so. But
but
everything
we
else, I
could,
think.
yeah,
I'm sorry. Go
we
ahead.
could see 2400 again, Luke, is a
Sure.
level
Yeah.
technically
Yeah. I
where
could see that.
yeah. So
Yeah.
how do you have and as far as Bitcoin is concerned, with Trump being in favor of it, even talk of a Bitcoin reserve, a strategic reserve of Bitcoin. What do you think of that concept?
I think it sends Bitcoin way higher, obviously, but
Yeah, yeah.
the U.S. has a fiscal problem, right? So the real $64,000 question is how do you fix it? And so, to me, I think what with the parabolic moves, it gets to a very binary situation, which is if I start from the end and work back, like I talked about, at the top of the show, the trading move is a very different move versus if the US government starts trying to cut and go into austerity, right? So it's
Okay.
if I start at the end and say this thing is going by March of next year, it's going to be clear that basically the US is going to financially repress, they're going to cut rates. We're going to have some sort of yield curve control one way or another, de facto, not explicit. I don't think we'll ever have explicit, but de facto yield curve control. So basically, we pin the 10-year at 4.25. We take the front end down to 1 to 2. And the dollar goes from 105, whatever today, to 90. And inflation's on its way from 4 to 8. And that to me, if I knew that was going to happen, I would see the price action we're seeing on our screens, which is um, in terms of equities, in terms of Bitcoin. I think, like I said, gold, I think has some risk off to wash through, and it could pull
Yeah.
back, but I think it ultimately is way higher. So I think that's one side of it. The flip side, if they come in and do austerity without cutting the debt first, you're going to want to own the dollar, and that's it. You can just buy the dollar, go to the beach, and wait until they, panic.
Everything will
And
get cheaper. Everything will get cheaper, right?
everything will get cheaper before the Fed has to take their balance sheet to 20 or 30 trillion to stop the meltdown of the system.
Okay. All right. And you talked about this type of behavior that this new president or former and once again the comeback kid president will be lionized in history books. Now, I want to know, do you mean the lions that hunt in prides in the jungle, or like the lion in The Wizard of Oz?
If he does the things it's looking like he's going to do, I think he'll be lionized in the history books as um, one of the greats, ironically,
Wow.
because he has a moment here. He has a moment in front of him in the same way that Obama had a moment in '08. And
Okay.
Obama took his moment
Squandered
and
it.
squandered it. He brought his Wall Street guys in and they did more of the same. And so
Yeah.
he squandered his moment. Trump squandered his a little bit the first time around because he too went out and hired a bunch of Wall Street guys and the usual sort
Right.
of deep state people. And, RFK Jr. noted that in this Tucker Carlson interview. He said, look, if you pay attention, he fired like half his cabinet in the first 2 years. And that is usually spun in our media as, well, he's a lunatic, Trump's a lunatic, and no one wanted to work with him, and. Maybe, but what have we learned about our media in the last 1 year, 2 years, 5 years, 10 years, 20 years, right? Like they're going to act in the interests of the state. They're giving us that side of the story. What if the story, the other side, that maybe is even closer to the truth, is that Trump wants to make real changes, handicapped himself by hiring the wrong people, and now he's
Yeah.
back and he knows. And early on, very early on, he's acting like he learned his lesson. He learned
Okay.
his lesson.
Isn't that when we learn the most, when we embrace our failures?
Yeah, and
So he's
yeah.
embraced his first term. He never would say it, and maybe it wasn't a failure, but he's getting a redo.
He gets a
And
redo, yeah, and
yeah,
he's got some people around him that know, and that's why I say I think it's important we start at the end. Like he wants a weaker dollar, full stop. And so like I get mechanically why tariffs, blah blah blah, by the dollar, great. I wouldn't linger. You make
yeah,
some money on that trade, I wouldn't linger. He wants a weaker dollar. He needs a weaker
okay,
dollar. None of this works. The debt side, the reshoring side, any of it, none of it works without a weaker dollar. And that can, weaker dollar against Bitcoin, weaker dollar against gold,
yeah, that's
weaker
everything.
dollar.
Okay, so that's the goal. So that it's going to be a great shorting opportunity when this rally, ends. I just hope it ends by at 109 and then starts heading down. I can make a case for 109 in Dixie.
And I could see that. And I think critically as a trader, what you want to watch for is the move, right? If you get the
Yeah,
dollar go from 105 and a half to 109 and the move stays at, I don't know, wherever it is today, 10, 101, 107, it doesn't. So
yeah,
yeah, if you call it the
yeah.
move
We're
index
at 105.60, and we're on the verge of a pretty important breakout.
right, and
So,
call up the move index on that MOVE on TradingView.
okay. So Luca's giving me something else to watch. I know Pete. I know you talk about it a lot.
Yeah, it
It's an
should be.
index.
Yeah, go to all. There it is, top one. Click on that.
Wow.
Right. So there was your right. So from October, that and if you overlay the dollar with that, that has been strong dollar up, bond
Yeah.
dysfunction up. And every time it's gone over 130, we've gotten dollar liquidity. Immediately going back 5 years because we can't have
Okay.
the treasury market dysfunction. And so that was the event risk I was talking about. Anyway, my point is that I would be watching that as a hawk if I was trading dollar or any dollar crosses, because if dollar continues strengthening and that stays well behaved, stays down there at 100 or so, then the regime has changed. If in the next week or two the dollar continues to strengthen and that thing starts getting off the mat and going higher, that's going to be your first warning that the regime has not changed, that the stronger dollar is still squeezing dollar debtors, and that
Yeah.
ultimately will self-limit the dollar rally. And then at the technical points on the dollar that you're talking about, you can short with some conviction because, again, the United States government is not going to allow the market to dictate its borrowing needs, pace, rate to it. It is always going to inject dollar liquidity when it needs it to keep that. So I think that's a key one to watch for traders over the next several weeks.
Okay, so you've heard it from Luke. I learned some things today that clarify what I've been missing in the dollar. So when you become a subscriber, you'll understand what I'm talking about. That Luke is very important to have in your intelligence gathering toolkit, and to go to From the Forest to the Trees, LLC.com. And Luke has a great YouTube channel. He's interviewed by everyone. Keep in touch with this guy. He's been, long Bitcoin for a long time, long gold for a long time. And it seems that, you know, he doesn't cater to traders. He's just helping people navigate the fourth turning, which is not an easy job. Okay, so Luke, appreciate you hanging out with us again today, my buddy, and we'll talk next year in a brave new world, right?
Absolutely. No, I appreciate you having me on. I always enjoy coming on and talking shop with you, my friend. It's
Uh,
really enjoyable.
Luke Roman, follow him on X at Luke Roman, and you're going to be more aware. Keep an open mind. It'll keep your account open. Thanks, Luke.
All right.
Great
Thanks, Dale. Have a
interview,
great one. All right.
like
Thank you. Take care,
usual.
my friend.
All right, buddy.
Bye-bye.
So that's it, Luke Roman, and it's you could watch it later on if you want, and you could join the team in 14 minutes on the Morning Edge. And I wish I had talked to Luke a week earlier. Anyway, uh, better late than never. I hope everyone has a great day. Consider being part of the community so that you could immerse yourself into the trading atmosphere and not just leave F.A.C.E and go off into your own little silo and do it yourself. Collaborate. All right. Cooperate, collaborate. You need a community in these times. These are tough markets. Okay. They are tough. I don't care if anyone's on a roll or not. I think you could ask anybody and they would say so. Anyway, good hunting the rest of the day. Don't just count your pips, count your blessings. And that's going to be a wrap for me. Hope you enjoyed Luke. Yeah, he's great, isn't it? 200,000 Bitcoin saloon. Wow. I'm hearing 120 and then a bus. Luke is not my father. I would be his father for it, Scale. All right. All right. Anyway, that's it. From Family Crypto. Anyway, have a great day, everybody. Adios. See you tomorrow. Turn around Tuesday. Take it easy. Huh. See you, Ollie. Thanks, Ingmar. Uncle, oh, nephew.